state visit a couple of days ago that they were getting ready to go for it, and he told them that supposedly right before the toast at the state dinner, which is why they were kind of winking and smirking at each other.
Yeah, it is pretty impressive. You know, when we have conversations, political conversations here in the newsroom, we're just kind of out in life. You know, when you think about Joe Biden, I know all the criticisms that's out there, but he did get a lot done.
In a divided Congress as well. Well, I shouldn't say that. It was Democratic control, but my goodness, you had a 50-50 Senate and a very powerful Republican Party in the House with such a thin majority for Democrats that he had a lot to work through here. You mentioned Joe Manchin in the setup that, you know, you couldn't get a lot done without Joe Manchin, but he managed to carve some big pieces of legislation that got passed. You add this new seat now with 51, that makes the job a little bit easier.
Joe, I want to end talking about Georgia here, now that we've had some time over the last couple of years to really think about the way the state has changed in terms of voting. Is this a swing state? Is it just anti-Trump now?
So
what does it mean for 24? And my gosh, can we trace this all the way back to Stacey Abrams in 2018 and what she did there?
You can, and before that, you know, this is it's a good decade in the making. Stacey Abrams putting this network together that has enormous reach for getting out the vote. And we saw this. We had record early voting turnout here in Georgia, and then a very sizable same-day vote yesterday.
I think that's
so look, I don't know if you can call this
the Hong Kong index.
Purple state, like some are suggesting. I think that pushes it a little far, but a swing state is fair when it comes to the presidential campaign. Donald Trump's going to have a hard time resonating here in Georgia, and that could be advantage Biden should we have Joe Biden running for re-election, or any Democrat.
Not to rain on your parade, guys, but how much of the vote did Herschel Walker get?
Are you going to make this 51-49 comparison for me? Because it's not lost on me.
I'm just saying it was really close, right? I mean, it's kind of interesting, like when we think about these states shifting, Joe.
Well, I mean, you think about 51-49 on the Senate, and this turns out 51-49 in percentage points. Kind of interesting.
Yeah.
But look, Raphael Warnock won by nearly 100,000 votes in this race, in this runoff. He won by 37,000 the first time around. So he got more people to show up and vote for his campaign this time, and it is worth noting. It was a close race, but he actually increased his lead.
All right, Joe, the team says, the bosses say you can go home and sleep for a month because you have been crazy.
Except for your show at 5, Joe.
That's right. We got a little program on the way. By the way, if you want...
Wait, oh, we cut him off.
On the ground in Georgia.
Yeah. Oh, we got
Killer Mike is going to join us at 5 o'clock to talk more about that. You'll be fascinated by some of the thoughts that he shared with us today down at the Ebenezer Church.
Joe Matthew, love that. Check it out at 5 p.m. Wall Street time on Bloomberg Radio. Right now, it is 2:33. Let's get a check on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Carol. Following Raphael Warnock's victory in Georgia's Senate runoff, Senate Majority Leader Chuck Schumer is serving notice that Democrats can use their expanded majority in the chamber next year to subpoena corporations and executives to strengthen oversight investigations.
Subpoena power can deal with corporate corruption and inequities and other problems throughout the country.
Schumer declined to say what companies or industries he thinks would be subject to scrutiny, but Democrats have in the past targeted financial firms for investigations. President Biden is back in Washington after another trip to a border state. This time it was Arizona, and he did not visit the border, which is not sitting well with Republicans like Congressman Chip Roy.
He, Mayorkas, they're all teaming up to endanger Americans. Poking his head in the sand isn't going to actually be enough. He's going to have to do something about it.
Congressman Chip Roy. China is retreating from the wide-ranging COVID-0 policy that is blamed for damaging China's economy. Beijing will now allow some people to quarantine at home instead of in centralized camps. Dr. Amesh Adalja with the Bloomberg School of Public Health at Johns Hopkins University says this all could result in a surge of cases.
I can expect that we'll see something like a wave occur, and hopefully they're able to occur at times that are not going to inundate the entire country's health system at one point.
Adalja says China would be well served to start vaccinating its citizens with Western vaccines that he says are highly efficient in stopping the spread of COVID-19. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are struggling as bonds flash recession jitters. Right now, we have got the S&P fluctuating between gains and losses. Down right now, but little change. Lower now by 2 points. Dow Industrials up 25. That is a gain right now of about 1/10%. But NASDAQ down 37 points now, a drop there of about 0.4%. 10-year yield is 3.41% with the 2-year, 4.25%. Spot gold up $17 the ounce now to $17.88, a gain of 1%. West Texas Intermediate crude down 2.6%, $72.28 for a barrel of WTI. So we've got stocks fluctuating. The S&P right now at 39.38. Savita Subramanian is head of U.S. equity and quantitative strategy at Bank of America. She says we're on a bumpy road right now to nowhere.
The probability of ending the year at exactly 4,000 is low, and point-in-time targets are somewhat ridiculous, but I do think that we are going to go down and then up. The problem is that is an increasingly consensus view, so I think the bigger risk heading into the first half is actually not being invested in equities.
Briefly, J.P. Morgan Chase has suffered a $70 million loss from a few large bets on bonds and credit default swaps put on by its European high-yield trading desk. J.P. Morgan Chase shares, they are up now by 0.1%. Citigroup CEO Jane Fraser says her bank is seeing countries around the world roll into recessionary environments. Citigroup shares, right now, they are down 0.4%. And that's a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. So among the great business rivalries of our time, Tim, no doubt about it, is Airbus versus Boeing. And they own the aerospace industry.
Oh, yeah. I mean, there's pretty much nobody else out there when it comes to narrow bodies and wide bodies here. Okay, so they've got a lineup of products that compete with one another. You got Airbus's answer to Boeing 737. It's the A320. But that's about to change because Boeing recently revealed that it's not going to design a new aircraft this decade, leading it without a competitor to Airbus's smaller A220. With more on her story, it's in the upcoming issue of Bloomberg Business Week magazine. It's on newsstands tomorrow, but you can read this story online and on the Bloomberg terminal. We got Julie Johnson, aerospace reporter at Bloomberg News, on the phone from Chicago. Julie, good to have you with us this afternoon. What's going on with this A220, which, by the way, Carol and I actually got to fly on earlier this year when we flew to Dallas?
I know, it's a fantastic plane. I've flown on it a couple of times as well, and I'm a big fan.
There's a window in one of the bathrooms. That's like one of the big highlights, right?
Yeah, I guess so.
I'm just going to warn you, Julie. Tim is really, really into planes.
I know, she knows. I bother her all the time with like non-work stuff. Just
like when we're picking flights to go places, he's like, well, you know what kind of plane that is. So anyway, so go ahead. Tell us about your story and what you dug into.
And by the way, Tim, I approve of this behavior.
Thank you.
Yeah. So anyway, it's really the product strategy gamesmanship is really fascinating between these two. And as you hinted at, they've had pretty much a 50-50 duopoly of plane making for years, decades, and that started to change recently. Airbus has taken control of the most important segment of the market, which is narrow bodies, with a plane that has called the A321neo that has just been a runaway sales success. So Airbus is doing really well at the top of the market. And weeks after Boeing's CEO basically said, look, we're just not doing a plane this decade, Airbus's CEO told Bloomberg, hey, well, funny enough, we are looking really closely at a new member of the A220 family that would go right at the heart of Boeing's product lineup. Now, just a little bit of history here, but Airbus got the A220 at a fire sale. I mean, I think it was $1 or euro. I forget the currency. From Bombardier. It was a pittance back in 2018, total fire sale. And when they picked up those first two A220 models, they also inherited really detailed engineering designs for a third and largest member of the family called the A220-500. And so that's the plane that Airbus is now talking up publicly. Do you want me to go on? Because there are so many aspects to this. It's really fascinating.
Well, first of all, what does it mean for Boeing if they don't have a comeback against it?
Well, let's just so there are a couple of things going on, and basically this is a classic pincer move, where Airbus has the top end of the most important market in aerospace, narrow bodies, with the A321, and they would be coming back with a smaller plane that's targeted right at Boeing's bestseller, which is the MAX 8. So if Boeing doesn't have a comeback, that means they continue to bleed even more market share to Airbus, and it's not good. But
Julie, you mentioned the MAX 8, so we got to go in on the 737 MAX and all the problems that Boeing has had. How much of Boeing's history of mismanagement with regard to the 737 MAX and the wake of the two crashes that killed hundreds of people a few years ago and the 20-month grounding of the plane, how much of that has to do with Boeing not coming up with a competitor to this A220?
Well, I think that Boeing's got $57 billion in debt right now, and that's a result of COVID and the MAX crisis. They had to stop building the MAX for I forget how long. It was a few months in 2020, but they were knocked out of sales for a long time. So anyway, the financial damage is going to be with Boeing for most of this decade, and that's a really big factor as to why they're just not in a position right now to do a new plane. But the MAX 8 has done really, really well in the market, and I believe it's outsold the A320neo, so that's the comparably sized Airbus model, and so it's definitely a success in the marketplace. And right now, Boeing's finances are riding on that plane.
Well, and the story that you guys report out says that 737 MAX 8, that sales restart handed Boeing a victory over Airbus last year, the competition for the most aircraft orders. So, Julie, the back and forth, I feel like, anybody who's been in this industry of covering business news, business stories, from year to year, it's like Boeing got this order, Airbus got this order, and kind of the back and forth. But I do wonder, is it potentially setting up for, Airbus to have a longer term advantage here, or how do you see it?
Well, I think Airbus, we should, if everything goes Airbus's way, they will dominate the market, not just this decade, but into the next decade as well. And so I think some people are really worried that, Boeing might be facing sort of a slow slide into mediocrity. But then I've got to just throw out just a grain of salt here, because none of this is going to happen anytime soon. Airbus has got some huge issues of its own, and its production system is a mess right now. So they're not in a position to take on a new plane. And if they pursue the A220-500, they're going to cannibalize one of their most profitable models, which is the A320neo. So it's risky for them as well.
Yeah, it's tricky, no doubt about it. Love the story. Tim's really into planes, and we have a lot of fun with it. So great to get into this story. It's a new issue of Bloomberg Business Week that comes out tomorrow on newsstands, but this story already you can find at Bloomberg.com/businessweek, and it is on the Bloomberg terminal. Julie Johnson, when it comes to things up in the air, we like to talk to her. She is aerospace reporter at Bloomberg News, joining us on the phone from Chicago. I have to say, I grew up with a dad who was an aerospace engineer. We did the same thing. We'd look up the plane and he'd be like, it's such and such a kind of plane. And I know you do that kind of thing.
I mean, that's why I'm so into planes too. My dad grew up on an Air Force base, so we just used to go to air shows all the time. And who doesn't love planes, Carol?
You have great advice, like when we're picking flights. Like, we don't want that plane because we can't lie flat as we're flying across the U.S. This is Bloomberg Radio.
headquarters. I'm Charlie Pellet with a look at some of the top company stories on the Bloomberg Terminal. Developing story right now. Headline on the Bloomberg Professional Service: ExxonMobil giving its American staff inflation-busting pay hikes as profit soars. The Exxon average salary boost is now 9%, with a further 5% for promotions. Again, those headlines on the Bloomberg right now. Developing story that out of ExxonMobil, talking about pay hikes for next year. Developing story as well from Peru. Its national police are holding former President Pedro Castillo after Congress voted for his impeachment. This according to a tweet from the law enforcement agency. We're keeping an eye on shares of Carvana. They are plunging now. Carvana shares down 43%. Wall Street's pessimism is spreading on its stock after the online car dealer's largest creditors signed a deal to act together in negotiations with the company. Again, Carvana now down by 43%. Prometheus Biosciences shares are surging after the company said 2 mid-stage studies of its experimental drug for inflammatory bowel disease succeeded, and it will move into pivotal studies. Right now, Prometheus is up by 176%. JetBlue Airways says it's going to update its JetBlue loyalty program next spring to accelerate passengers' ability to earn perks like early boarding and achieve higher status levels, and to select their own award. Those are company stories. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, more Business Week coming up in just a moment. First up, a check on world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. More classified documents, 2 in fact, have been found at former President Trump's properties. The New York Times is reporting the searches were conducted by a team hired by Trump after a federal judge directed the former president to have his lawyers look for any materials still in his possession. The North Carolina legislature is asking the U.S. Supreme Court to allow it to redraw district lines that would elect 11 Republicans to Congress. The state Supreme Court had ordered a new map that would elect 7 Republicans and 7 Democrats, reflecting the popular vote. Bloomberg's Irv Chapman has more on today's arguments before the court.
Lawyer David Thompson complained. There was a map, and it was thrown in the trash by the court. Justice Clarence Thomas said the question to him is,
What is the source of the authority for the North Carolina Supreme Court to be involved in a federal election?
Justice Elena Kagan pointed to potential consequences.
Legislatures could get rid of voter protections. It might allow the legislatures to insert themselves in the certification of elections.
The issue relates to wording in the U.S. Constitution giving states authority to set times, places, and manner of elections to Congress. In Washington, Irv Chapman, Bloomberg Radio.
Duke Energy officials say power will be fully restored in Moore County, North Carolina, by the end of the day. Over the weekend, a gun attack on 2 substations knocked out power to thousands. Police and the FBI are still investigating. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Well, a historic evening last night in Everett, Washington, as the last 747 ever produced left the company's factory. I took a look back at the airplane's more than 50-year history and the way that it changed air travel forever. This year marks the end of an era in aviation. The last 747, after more than 50 years of flight, is rolling off the assembly line. The 747 is probably the most recognizable airplane ever built. It's got that iconic hump on the passenger versions that houses the upper deck, while on freighters allows the nose to flip up so it can more easily load oversized cargo. Boeing's jumbo jet has transported every American president since George H.W. Bush in 1990. And for decades, NASA's space shuttles rode piggyback thousands of miles. When it entered service in 1970, the engineering marvel changed aviation. The 747 was the first twin-aisle jet ever produced. Boeing even built the world's largest building to manufacture its new creation. Twice the size of its predecessor, the 707, the jumbo more than doubled the number of possible passengers. It flew further and faster. Suddenly, air travel was cheaper and more accessible, opening new routes, effectively shrinking the globe. Boeing says that in the more than 50 years it's been flying, the 747 has ferried nearly 6 billion people. There were also moments of tragedy. The deadliest accident in aviation history happened back in 1977. That was when two 747s collided on a runway in Tenerife, killing 583 people. And as the decades wore on, leaps in engine technology led Boeing and Airbus to develop twin-engine jets that could fly the same long distances as the four-engine 747, but at much lower costs. 747s are now mostly used as freighters, though the Pentagon still has two 747s that are being kitted out for future presidential transport. So even though Boeing is done making 747s, you'll still be able to look up and see the so-called Queen of the Skies flying for years to come. The 747 is actually still flown by a handful of passenger airlines. You can fly it on Air China, Korean Air, Lufthansa, and a couple more. So, Carol, if you haven't flown the 747, you can still have a chance to fly on the Queen of the Skies.
It can still be on your bucket list and you can find it. Like, that's the thing, right? These planes just don't go away overnight.
Exactly.
They often find them, around the globe in other markets. All right, coming up in just a few seconds, we're heading over to our TV colleagues. We're going to talk about the trade today. It's really about that bond market. You are listening and watching Bloomberg Business Week on Bloomberg Radio.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now, we are about 60 minutes left here in the trading day. Counting you down to the close, Romaine Bostic and Katie Greifeld. We're joined right now by Carol Massar and Tim Stenovic for our global simulcast. We welcome our audiences across Bloomberg Television and Radio, as well as on YouTube and Quick Take. A fifth straight day of losses here in U.S. equity markets. And the moves that we've been seeing today, Carol, in the bond market seems to suggest a little bit more pessimism.
I got to say, it really is all about the bond market today. And there is pessimism, like in all walks of, I feel like, the financial markets today. And again, I often talk about the rally that we're seeing in those Chinese names, even if there's pessimism in the U.S. That's not the trade today. If you look at the NASDAQ Golden Dragon China Index, once again, we're seeing a little bit of some selling, down almost 3% as we speak. And it's dragging down names like JD.com, Alibaba, they're both down more than 3%. Pinduoduo is down about 1.5%. What's interesting is we had China announcing further easing in COVID restrictions. You have Chinese officials debating an economic growth target for next year of around 5%. They're thinking about the economy and a recovery. But at the same time, you had trade data from China showing exports and imports both contracting at steeper paces in November. So that points to sluggish demand. When China slows down, you got to be worried about the global economic outlook, Tim.
I actually found some outperformance related to China on a certain level. We are seeing some outperformance when it comes to gold miners today. This is the VanEck Gold Miners ETF. It's up more than 2.2%, Romaine. It's higher after the People's Bank of China reported that it had been buying bullion, and it's increased its gold reserves for the first time in over 3 years. The People's Bank of China raising its holding by 32 tons in November from the month before. So it's kind of shedding some mystery on who the sovereign buyer was of all that gold.
Yeah, absolutely. And we've seen those stocks rise here. Of course, that's not enough here to juice this market. An S&P 500 down about 0.2% here on the day as a lot of those big cap tech names weigh them down. The Dow unchanged on the day. The NASDAQ down by about 0.5%. So not a meaningful drawdown here, but 5 straight days in the red overall for the major indices.
Yeah, 0.2 on the S&P 500. Not a huge move. If you look under the surface, though, there's a bit more weakness. You have 8 sectors lower right now, 3 sectors higher. Real estate actually just flipped into the green. Healthcare, the outperformer today. So too are the staple stocks. Maybe that's a little bit defensive. I don't know. But if you look at the bottom, it's communication services and it's technology.
I tried to find some bright spots. A database software company, MongoDB, up about 20% here on the day, actually having its best day going back, I think, to early 2021 here. That's on the back of the company's earnings and, more importantly, the forecast that they gave. State Street shares also moving higher, up about 9% here. This on the back of the CFO's comments, as well as a buyback of the stock, helping to lift it there. Meanwhile, some of our favorites remain lower. Tesla down about 3.5% here on the day, and Southwest Airlines, really almost everything in the travel sector right now, down about 4% here on Southwest Airlines. One of the catalysts, though, that I think did move the broader market, and particularly the bond market earlier today, was actually the revision on the later unit labor cost report. Remember, this is quarterly data, so it's only through the end of September. Backward looking, but it actually showed continued moderation in some of those labor costs. 2.4% in the most recent quarter. That's down from the previous number that we had, which I think was well above 3. But it adds to that narrative, if you really want to believe it, Carol, this narrative that maybe, just maybe, there is a case to be made for a Fed pause. Of course, the negative aspect of that narrative is that a pause would probably only be because of deteriorating economic conditions.
But then you go ahead, Romaine, and get news like you get from Exxon, right? That it's giving U.S. staff inflation-busting pay hikes, 9%, with another 5% for people who get promotions. So if there's concern about a wage price spiral, then news like this kind of feeds that narrative.
Well, that's something to consider, right? We know the energy industry has certainly been a standout, certainly on the equity side of things, and just in general, we understand the macro issues at play there. Speaking of macro issues, as Romaine has been talking, we've been talking, we are seeing the drag, concerns about the Fed overdoing it, concerns about an economic downturn, and that's why you've got some pressure, certainly on the equity trade and that bond market movement today. Having said that, Savita Subramanian, she's over at Bank of America. She's head of U.S. equities and quantitative strategy, and she said despite the negative concerns and maybe about stocks hitting another low maybe early next year, she says you still want to be in equities. Here's what she had to say earlier on Bloomberg.
I do think that we are going to go down and then up. The problem is that is an increasingly consensus view. So I think the bigger risk heading into the first half is actually not being invested in equities. Not having exposure to stocks and sticking all your money in bonds and cash is a mistake at this point.
All right, Savita Subramanian over at Bank of America. But, you know, hence the debate continues. We're going to have a lot of folks weighing in on where you should be. Should you be in equity? Should you not be out? And this is kind of where we are. We just don't quite know. Is the Fed going to overdo it, turn us into a downturn? There's just lots of questions out there, Romaine.
I do wonder, though, I mean, and I don't hear the entire interview, but I mean, if you're talking about individual stocks or individual sectors, that makes a lot of sense. But in aggregate, I mean, I don't think no one's really predicting an up market over the next 12 months. I mean, I think at least on the average, most people expect us to be flat to down.
Yeah, but I think one of the issues that she talked about in that interview is the idea of missing out on any sort of rally if you are on the sidelines, and that's what we hear from market participants or you know, day in and day out. At the same time, you know, these are folks who make money.
Tim. That's what not timing the market. Time in the market.
I do hear that almost every single day.
Yeah, I have a pop quiz, actually. This is a little bit fun.
You only get to do it on Thursday, kiddo.
Okay, well, it's Wednesday, so I'm going to break the rules. How much does a 3-month Treasury bill yield right now?
3-month?
3-month Treasury bill.
Is it above 4?
It's above 4. It's 4.2%. So I get the argument that you don't want to miss out on any upswing, any big face-ripping rally, but I mean, you're getting a lot of safety in cash right now.
Short term, though, very short term.
Well, yeah, but you're getting, you know, you're still getting over 3% longer term out. You're getting 4%, and that's just on treasuries. If you're moving into sort of safer corporates or like we were just talking muni bonds, you get that too. And I mean, there is a sort of an argument to be made about the idea of competition now that we didn't have, meaning competition for return and yield that you didn't necessarily have a couple of years ago when it was basically all equities and nothing else. So you can pick and choose where you want to be now, and if you're comfortable with 4 or 5% and not really taking whatever volatility risk the equity market might bring, well, why would you move back in there?
5-year 3.6. You've got the 10-year at 3.4. Man,
I'm old enough to remember when like a 5% return on fixed income was pretty darn
How old
good.
are you?
No, I plead the fifth. Yeah, I'm younger than you. How
In
about
any
that?
case, I mean, to the idea of there is no alternative, that was the mantra for so long. But you don't, to what Romaine is saying, you don't even have to venture that far out on the curve into the riskier parts of the market. It's right here. It's in the very short end of the Treasury curve. Zero credit risk, zero duration risk. Again, I get the argument. Maybe you don't want to be uninvested in the equity market, but you have a lot of options now.
So there is an alternative, I guess is what you're saying, Katie. Can we do a little shout out to Carol, a round of applause that she got your pop quiz right?
That was pretty good.
Yeah, that was pretty good, Carol.
Gold star.
Just wait till Thursday when the actual quiz comes out.
Now that's a good partner. What can I tell you? All right, guys, we're going to be back in less than an hour.
I didn't hear you, sorry.
And there we have it. All right, we'll be back in less than an hour's time. Our cross-platform coverage, Beyond the Bell, we're going to bring you down to the close on this Wednesday. Radio, TV, YouTube, and Bloomberg Quick Take. We'll see you at 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on Bloomberg Radio. This week, JP Morgan downgrading Royal Caribbean to underweight from overweight. They were concerned about the company's elevated leverage and the magnitude and timing of future capital commitments, despite Royal Carib's $10 billion of capital raises so far this year. They have raised a lot. Well, the company's cash and debt positions, something I recently talked about with both the CEO and CFO of Royal Caribbean, Jason Liberty and Naftali Holtz, respectively. The conversations in another episode of Chief Future Officer, which airs tonight on Bloomberg TV. The conversation begins, as so much does today, about the pandemic and life after, which I put to CEO Jason Liberty. Check it out.
All of a sudden, the revenue just turns off.
Right.
They did not teach this in business school, by the way. So, it turns off, and you have to figure out, how you're going to ensure that the company has the liquidity needs in order to be able to get to the other side of it.
No revenue at all.
Yeah, for 18
Zero.
months.
But you have costs and expenses.
That's right. That's right. What you learn in the pandemic is that leadership really matters.
For Royal Caribbean Cruises, the lesson was stark and clear. After generating almost $2 billion in annual profit before COVID, the company lost more than $5 billion in both 2020 and 2021. At the end of 2021, longtime CEO Richard Fain stepped down after 33 years, handing the reins to CFO Jason Liberty. What was it like, that transition going from CFO to CEO?
Yeah, we were still kind of coming out of the pandemic. We were still ramping up our fleet, ramping up our occupancy. And so we had to keep our eye on the ball on, because historically we would bring about 3 ships up a year.
Yeah.
And here we brought up 64 ships in a year.
Change.
It's a big change, a Herculean effort. I'm incredibly
Helping the new CEO meet those challenges, new CFO Naftali Holtz, who moved up from VP of Finance.
I had hired him, I think, about 6 months before the pandemic. Well, I was looking for somebody with a lot of really strong work ethic, somebody who was strategic, somebody who understood how to get things done inside of an organization. And I saw those qualities in Naftali, and he has done an exceptional job coming into the role. He hit the ground running.
That dynamic in the C-suite has helped Royal Caribbean's comeback maintain momentum.
What's it like becoming CFO, working for the individual who was CFO and is now CEO? What's
I feel very fortunate because I have someone who has been in the job for many years, is still with the company. Obviously, he has much more responsibility, but he understands what it means to be in my job.
So what was that like for you, having been in the CFO role for so long? What did you expect of him?
I rely on him very much to be my eyes and ears, my strategic partner, and I'm also very transparent with him in terms of what I'm thinking about and doing. And sometimes he'll sit there and say, do we really need to spend money on that? And I'll say, yeah, we really need to spend money on that.
I'm a very direct person, and I care, and I feel that that's important for me to make sure that if I feel differently, at least we have a conversation. And many times I would think one way, and then he would point his point of view, and it would make sense. And I would say, you know what, you're right, and and I get behind it.
Advancing the company's long-term mission through honest conversation, that's how Naftali Holtz takes the CFO role forward.
And maybe many years ago, it was about making sure that the numbers are correct and everything is on time and we report correctly. And I think evolved today into much more than that. What is the strategy that we're going to embark on? What does that mean to the financial performance of the company, and how do investors view that? That's one aspect of it. And the other is just making sure that we are always on the pulse.
With its full fleet returning to the seas in 2022, Royal Caribbean has enjoyed a financial rebound. Bookings for 2023 are robust, and they've been accelerating every quarter. In November, the company announced the Trifecta program, a 3-year initiative designed to exceed 2019 performance in key financial metrics by the end of 2025.
Inside the industry, they're confident because there's pent-up demand. People want to travel.
We have 130,000 people sailing with us right now as we talk.
It's amazing.
And they are spending more than they did a month ago. They're spending more than they did a year ago. They're spending more than they did pre-COVID on travel experience. We know the ships that are coming in. These ships are huge money makers, very high yielding because of the inventory mix. There's more space for onboard revenue venues. They're very fuel efficient.
Intent to cruise is climbing. Whether or not that can be sustained, I think, is a question to be answered. And there are a couple of different elements of that. The first being the economy.
Do you get a little nervous with all the recession talk? Or another black swan? Who would have thought? Right, what happened the last couple of years?
It's hard to plan for it, right?
Okay.
So what we are focused on is to making sure that we have the best business, so the business is run well. We are obviously focused on liquidity and our financial metrics, and we want to fix the balance sheet.
Right.
You know, to get back to where we were.
Fixing the balance sheet, that's a heavy lift. Royal Caribbean is carrying nearly $24 billion in debt. Though it's paid down most of its short-term obligations, the debt still looms large. It's a dark cloud over the entire cruise industry.
The valuations for the major cruise lines have gone down, and the debt levels are very high. So they will have difficulties to receive more debt, and it might be very high interest rates.
The debt that we took on, half of it was in order for us to deal with not operating for those 18 months and ramping our business back up.
Staying alive.
Staying alive, that's right. The other half of it was actually because we were growing and we were taking on new ships. And those new ships, we get incredible export credit financing for. And we've done a lot of refinancing, and we do believe that over the coming years, we're going to be in a much better place to do two things. One is deleverage and also improve our rating. And so that will also lower our capital costs.
Are you comfortable with that level of debt and being able to service it?
Well, we're not happy with it. We want to get, our goal is to get back to the balance sheet we had, which is an investment grade profile. We're back sailing, in 96% occupancies. We're generating cash flow from operations. So, our goal is now to continue to grow EBITDA, continue to grow the cash flow so we can, pay down the debt and bring the balance sheet back. This business is very resilient.
We always said that we wanted to have a balance sheet that could take a punch, and we proved that we had a balance sheet that could actually take a meteor. And so I think that's why, NAF is very focused. I'm very focused on getting back to a investment grade balance sheet. I'm getting back to an unencumbered balance sheet. That sets us up for events as they come forward.
Can Royal Caribbean perform its way back to unencumbered financial stability? The cruise line generates about 60% of revenue from sales of tickets. Most of the rest comes from onboard spending. At the moment, higher prices aren't holding down demand in either category.
On the ticket pricing side as well as on onboard spend, our pricing is up versus 19. We use 19 as our reference point.
Onboard experiences have really become a much more integral part of the experience. What we have seen in the past couple of years is that we have a much more penetration of onboard experiences for our guests. So people just want to consume more, they're willing to spend more, and that's obviously much that helps the yields and the revenues as well as the margin.
All right, everybody, you've been listening to a snippet from tonight's premiere of Chief Future Officer, where we are featuring the CFO of Royal Caribbean, Naftali Holt. You can listen and actually watch it on Bloomberg TV at 9:30 p.m. New York time, Wall Street time. We also featured the CEO, Jason Liberty, who was the former CFO of Royal Caribbean, then became CEO. Some other voices you heard in that clip included analysts and folks who cover the cruise industry. But, this was an industry. We know so much was shut down in the pandemic, Tim. Completely shut down, had to tap the debt markets, all of the big cruise operators. So there's a lot of debt on everybody's balance sheet, but they're coming back, and it feels like in a big way, especially as folks want to experience things. I was on a cruise ship while we were shooting that, and it was kind of a premiere of trips to come, but people are coming to cruise again.
The demand for travel right now is just off the charts, Carol. I was going to ask if you actually got to go on a short little mini cruise. I know you did this on a Friday.
I did it on a Friday.
Did you take a 3-day weekend or anything?
I did not go, but there were lots of other folks that were going to take. It was kind of a journal, like a media jaunt if you wanted to. I didn't do it, but they're talking about, they've got a new huge ship that they're getting ready to put out on the seas, a whole series, and they've got record bookings for that ship and more. So it does feel like people want to experience stuff and go out and do something and go on a trip.
I increasingly hear about young families going on cruises because they have something for, every generation of the family.
And that's a lot of what they're seeing, that they're seeing multiple generations, and people are buying the ticket in advance and then, booking all these excursions and spending a lot more later on. Anyway, check it out. Chief Future Officer with Royal Caribbean CFO Naftali Holtz. That's 9:30 p.m. time tonight on Bloomberg Television.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got the Dow, the S&P, and NASDAQ all declining. In fact, right now, the S&P 500 index at or near session lows. So let's head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red in a choppy tape, with the Dow currently down 82 points. S&P's drop 18, and NASDAQ is lower by 83. The U.S. 10-year yield sinks to 3.41%. Gold is up 18, oil is in the red, and Bitcoin is trading lower by 1.1%. Among the main 11 S&P sectors, leaders were healthcare and staples. Telecom and tech were under pressure, and leaders to the upside in the Dow, 3M, Merck, and Home Depot, while Salesforce and Apple led to the downside. After earnings, Toll Brothers rose 7%, and Campbell Soup EPS beat estimates. In other news, Coinbase sees 2022 revenue down more than 50% versus 2021, and Carvana plunged as much as 47% as Wedbush cut the price target to $1. Wrapping things up, C3 AI and GameStop report after the bell. Live from the Fraser Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you know, our devoted listeners and watchers, we in the past have talked about how we like getting to talk to the city's mayors across the United States. We get some insight on life on the ground, on growth, labor markets, investment, innovation, and more. And today, Tim, we're focusing on Tulsa, Oklahoma, which Bloomberg News reported on back in September that a consortium that includes Devon Energy, Williams, and some others partnering with a Tulsa nonprofit founded by the George Kaiser Family Foundation in hopes of bringing as many as 200,000 energy tech jobs to Oklahoma over the next 5 to 10 years. So we want to get a lay of the land when it comes to that economy.
We got more with some of the city of Tulsa. We welcome Mayor G.T. Bynum here in our Bloomberg Interactive Brokers studio. Mr. Mayor, good to have you with us here at Bloomberg. How are you?
I'm great. It's great to be here. Thank you for having me on.
Hey, I want to get to the detailed programs that you're working on, but talk a little bit about the economy as you're seeing it right now in Tulsa, because yesterday we heard from the big bank CEOs, and the overwhelming theme was they were concerned about us heading into a recession next year and potentially in the second half of next year. What do you see?
Everything in Tulsa right now is very strong. I mean, we're seeing probably the greatest moment of investment in the history of the city is occurring right now, both across the public and private sectors. Our core industries in Tulsa, of course, are energy and aerospace, but we're also seeing a tremendous level of interest and investment around advanced mobility. That's something that we just secured. We were one of 21 cities out of 600 that applied that secured a Build Back Better Regional Challenge Grant from U.S. Department of Commerce. And we're using that to build the advanced mobility industry in Tulsa that's expected to develop 30 to 40,000 new jobs over the next few years with a projected economic impact between $3.5 and $5 billion. So right now, I mean, the economy is very strong. For us, I think, and as a mayor, the big concern is inflation and the challenges that presents with keeping up with costs as a city government, where we have to have a balanced budget every year, and providing the level of service that people expect when the cost of doing everything, whether that's fixing a street or hiring a police officer, is dramatically more expensive than it was just 2 years ago.
We also want to mention that Mr. Mayor has participated in the Bloomberg Harvard City Leadership Initiative and also the Bloomberg Philanthropies City Data Alliance. Of course, these have been founded by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mayor Bynum, what would you like your economy to be? Energy has been a blessing, right? But it can be a curse in terms of overexposure. Where do you want your economy to be in, let's say, 5 years?
Well, I think the key for us is that we want our economy to be diversified and be one where it's creating equality of opportunity in our city. We have consolidated all of our economic development efforts in Tulsa behind that goal of using economic development to drive equality of opportunity in our city. We think that the advanced mobility industry presents a really great opportunity right now in the history of that industry.
So when you say advanced mobility, you mean specifically what and who?
For us, what I'm talking about there would be drones, electric vehicles, autonomous vehicles. The funding that we receive from U.S. Department of Commerce, we're using to build a 110-mile drone testing corridor through the Osage Nation that they are going to build. We're building an autonomous vehicle.
So they benefit.
Correct. The Osage Nation. Tulsa's at the intersection of 3 tribal nations, the Osage, Cherokee, and Muskogee Creek. We work with all 3 of them on our economic development efforts. But we think that one is a big one. The other key one for us, Tulsa actually, we get no attention for this, but it's kind of by design. The University of Tulsa is probably the leading university in the nation when it comes to graduating cybersecurity graduates. by its nature, is not one that you put billboards up and advertise.
But it's so funny that you say that, because our guest at the end of the broadcast is all about kind of a group, speaking of tribes, like a group of folks that are dealing with ransomware specifically.
Yes.
So cybersecurity is a huge, huge industry.
Oh, 100%. And it's not going to go away. It's not a fad.
Right.
It is something that's growing. And so the great challenge for us is to have that intellectual capital at our university, and how do we translate that into new companies and job creation.
How do you get those students who graduate to stay in Tulsa and work for companies that are there? I mean, look, it might be easier than ever because people can work remotely with jobs like these.
Can I just say, for those who
Yes.
are watching on Quick Take and YouTube, you can see, well, maybe the mayor, he kind of chuckled at that. So, right, because it is, educate them, but you want that younger generation to stick around.
Oh, no. I mean, that's the challenge is federal agencies historically have just vacuumed up all these graduates, and they've gone all over the world rather than staying in Tulsa. You mentioned the George
So they're
Kaiser.
spies, is what you're
You
saying.
said that, not me.
Okay, go on.
But you mentioned the George Kaiser Family Foundation. They're actually working with the University of Tulsa to lead an initiative that spurs the growth of companies by graduates coming out of the University of Tulsa's cybersecurity program, so that it has two arms. It has one where it's preparing graduates for public service, and then it has an
Or
arm
spying, you can say. No, I'm
for
just
public
kidding.
service, which might be a public service, and then an arm that's there for business growth and entrepreneurship.
What's the trickiest part of your job right now in terms of, as you look at the economy, there's a lot of uncertainty. Tim kicked it off, the conversation about we're trying to figure out what next year holds for us. Even in a downturn, because of the energy pad and the energy crunch that we've seen, does that give you guys a lot of room?
I mean, the trickiest part of my job right now is that there is so much growth that we don't want to get out too far over our skis, where we find ourselves in a position. I started as a city councilor 2 months before the Great Recession began. And I saw what happens to a local government that builds in costs that all of a sudden you wake up one day and realize you can't cover anymore.
Right.
And you have to start looking at laying off police officers and firefighters, and no mayor and no city ever wants to be in that position. So how do you maximize the growth of our city and move with the opportunities we have before us right now? But to the point you're raising earlier about what those CEOs are saying, we don't know what's waiting for us in 2023 or 24, and the economy always comes down at some point. And so when will that be, and how are we being very secure and being prepared for that while trying to maximize growth?
We had Mayor Maddie Parker from Dallas-Fort Worth here.
Yeah,
Fort
she's
Worth
great.
Mayor.
Yeah, she is
just a
great.
few weeks ago. I asked her this question too, because both of you are young, politically moderate Republicans. And I'm wondering if it's tough to be a moderate Republican when you see what's happening in the Republican Party on a national level. Like, how does that make your job more difficult?
Oh, I think it's tough to be a moderate anybody right now. I mean, I think that the greatest threat to our country right now is the political polarization that occurs. It's one of the reasons I'm so thankful that I work in local government, where Republicans and Democrats and independents still do work together to solve practical problems. I mean, you mentioned the Bloomberg City Data Alliance. That's one of the things I love about, as a mayor, being able to utilize data. It's a tool where you can bring people of different political philosophies together and solve problems that they don't have to be philosophical debates. They can be practical problems that you solve. How do we build a better street? How do we hire more police officers?
Does it
How
make
do
a
we-
difference?
Yes.
Because, we're very
Makes all the difference in the
number
world.
data, centric. And I feel like data tells or numbers or information tells a certain story or tells the truth. But does it resonate no matter what the political leanings might be of a party that you're talking to?
It 100% does. And I say this as somebody who worked as an aide in Congress for 6 years before I moved home and ran for the city council. All of our street projects are selected based on analytics. The numbers that we determine on how many police officers we need, that's based on analytics. We're trying to build out more and more utilizations of data into the work we do as a city, so that we're taking that partisan polarization that you see so much at the federal level and boil it down into more practical problem solving that people can get around. And by the way, my mayoral administration, it's equally divided between Republicans, Democrats, and independents. Our city council is the same way. At the local level, you still see that collaboration that is non-existent at the federal level today.
We'd be remiss. We've only got about 30, 40 seconds. But the legacy of Black Wall Street, how does that factor in?
Well, I mean, that's driving so much of what we do right now. I ran for mayor I decided to run for mayor the day that I realized that there was an 11-year life expectancy gap between kids growing up in the predominantly African-American part of Tulsa and the rest of the city. As a dad of 2 kids, I wanted the kids growing up in that part of the city to have the same opportunities that my kids do. And so everything that we're doing as a city right now around economic development and city services is around creating that equality of opportunity so that Tulsa really can be a city where every kid has an equal opportunity for a great life, regardless of the part of town they're growing up in.
Well, we wish you luck with that mission, and come back and tell us how things are going.
Thank you.
So appreciated. G.T. Bynum, Mayor of Tulsa, Oklahoma, joining us here in our Interactive Broker studio.
Let's get to Washington, D.C. now. In Washington, D.C., we find Nancy Lyons. She's standing by in our 99.1 studio for a check of the latest world and national news. Hey there, Nancy.
Thanks, Tim. Senate Democrats are celebrating Senator Raphael Warnock's win in Georgia's runoff election.
They say all good things come to those who wait, and this outcome is absolutely worth the wait. After 1 year, 10 months, and 17 days of the longest 50-50 Senate in history, 51, a slim majority. That is great.
Senate Majority Leader Schumer says Warnock ran a strong, inspiring, and unifying campaign against Republican challenger Herschel Walker. Warnock's win means Democrats will not have to negotiate a power-sharing deal with Republicans, and Vice President Kamala Harris will not be called on as frequently to break tie votes. Well, now that Democrats do have the majority in the Senate, they are turning their attention to a traditionally red state.
Senator Raphael Warnock's victory in Georgia is likely to have a lasting effect on future elections, starting with the presidential race of 2024. Now, Georgia is a traditional Republican stronghold, but now the GOP will have to spend millions just to hold on to it. The win also gives Democrats a blueprint for other states like North Carolina. President Biden was the first Democrat president to carry Georgia since 1992, and it has been decades since both of Georgia's senators were Democrats. In Washington, I'm Amy Morris, Bloomberg Radio.
Superstar outfielder Aaron Judge is reportedly signing a deal to stay with the New York Yankees. He's apparently gone with a 9-year deal worth $360 million. Bloomberg sports and global business editor Kathy Larkin on that one-of-a-kind deal.
Yankee fans should be happy. This was a really competitive market for Aaron Judge, and he's getting a lot of money, but it's arguable that he deserves every last cent of that after the season he had, the record-breaking home run season last year.
Bloomberg's Kathy Larkin. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We have got 20 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red right now. It has been a volatile session, choppy day, but the S&P right now on track for 5 losing sessions in a row. Stocks under pressure once again. Treasuries signaling growing concern about an economic downturn amid an aggressively tight Federal Reserve policy. The 10-year yield, 3.41%, with the 2-year yielding 4.25%. Spot gold right now is up $16 the ounce, up 0.9%. Crude down 2.8%, 72.18 a barrel. Equities lower across the board, with the S&P down 10, down 0.3%. The Dow down 27, down 0.1%. NASDAQ down 59, a drop there of 0.5%. On a losing day for the U.S. equity market, Prometheus Biosciences shares are tripling after the company said 2 mid-stage studies of its experimental drug for inflammatory bowel disease succeeded, and it will move into pivotal studies. Mark McKenna is the CEO of Prometheus. He was interviewed this morning on Bloomberg Markets.
Up until this point, most of the drugs in the category only provide 10 to 15% remission. So we can do better for these patients. And today, the data that we showcased was, sets a new high watermark for drugs in this category across efficacy and safety.
And again, Prometheus shares, they are now up by 172%. GameStop after the bell, down 3.1%. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, let's get to it. We've got about 18 minutes left in today's trading session. Bouncing around on the equity trade, as you heard from Charlie, little changed overall, just down a hair on the S&P, NASDAQ down about 0.5%. But as we've been saying, Tim and I have been talking about, really, it's the moves in the bond market that are pretty significant today. And you've got that 10-year at 3.41. 2-year note with a yield of 4.25, but you've seen investors moving into treasuries and pushing those yields lower today.
Yeah, a little bit of pessimism that we're seeing over in the bond market. Let's get into it with David Hardin, CIO of the Registered Investment Advisor, Summit Global Investments. They've got over $2 billion in assets under management. David joins us this afternoon from Salt Lake City, Utah. David, how are you?
I'm doing well, thank you.
Well, that's exactly where I wanted to start, the bond market. What are you seeing there? I'm actually surprised, given the moves that we're seeing in the bond market, that equities aren't reacting more.
Well, I think people are still a little bit focused on the possibility of this Powell pivot. I think that's in people's minds and hopes. I think maybe they're wanting that under their Christmas tree, if you will. And so I think the stocks are a little bit more focused on him playing Santa Claus for us. But in all reality, the bond market might have it right. They seem to get it right a lot more often. So we have to pay attention to that move.
Yeah, I mean, the bond market, demand for longer dated bonds drove a yield inversion to a 4-decade extreme, sending 10-year rates below those on the 2-year notes by the most since the early 1980s. So that is pretty extreme. At the same time, I'm looking a little bit at what's happening in equities. You had MasterCard announce a $9 billion share buyback on December 6th. Lowe's is rallying in what is an overall down market today after the company reaffirmed its annual forecast, gave its initial view for next year, and announced a new $15 billion share buyback. Do you feel like, Dave, this is the beginning of companies, publicly held companies, not sure what to do right now and worried about the outlook that we're going to see kind of the rollout of the buybacks?
I think the buybacks have been successful in the sense of the return. If you look at the returns year to date, yields and buybacks combined with higher yields, the company giving back to their shareholders has definitely been the winner year to date. There's no doubt about that. So I think that's definitely out there. And yeah, you're going to see more companies trying to find out how can we raise our share prices, and following the winners is not a bad strategy. But the reality is there's also just a lot of other things in the market that are going to cause us to pause. I mean, being up about 14 to 17% since the lows in say, August, we've rallied tremendously. So giving back 20%, we're only going to be back to where we were in August or what have you. So I think the market has a lot of potential dry powder that we have to be very careful of.
What about when it comes to lower lows than we saw back in October? Do we see those coming?
If you study the bear markets of the past, say in the 70s specifically, because they had a lot of inflation in the 70s like we have today, there were times when the market rallied up 50% and yet continued to go downwards. If you think in 1974, Arthur Burns cut rates, and the market rallied 50%, but yet the 70s were a big bear on the market. So the answer to your question is ultimately yes. It's very possible that we retest those low lows and we get back to there rather quickly. Just what's going to be the catalyst? That's the crystal ball that's hard to tell.
Yeah, and I guess some of it depends on if indeed we go into recession, how deep and wide that recession is and what it does to corporate earnings and kind of a reset on valuations. Having said that, Dave, there are some names that you like, and this kind of gets to what Romaine on our TV side said. I mentioned a commentary that someone made about you got to be in this market, basically, and he's like, well, do you got to be in individual stocks or do you got to be in the overall equity trade, kind of all in? You do like CVS. Tell us what the investment thesis is behind that one.
Yeah, so the reality here is that we are stock pickers at heart and money managers in the sense of risk management. So everything we like depends on the possibility of the return minus the possibility of the downside return, right? So we're trying to minimize that downside risk. And CVS gets this for us. It has a high dividend growth. It has a high unlevered free cash flow. So you're looking at quality earnings here, a lower earnings variability. It's an industry that everybody can get their arms around and understand. And let's face it, even in a recession, there's still a lot of health problems in America, the way that we eat and the other problems we have. So we really like this, and we consider this healthcare as a really good buy for us right now.
Is it more of the Aetna part of it, or is it more of the retail pharmacy locations, or is it both?
I think it's both. I think both have their value that they're adding, and they're in a little bit different areas of the healthcare market. And so, yeah, there's a lot of positive to be seen here with this company right now.
All right, so in the energy space, you like ConocoPhillips, and we know that if you look at the 11 major industry groups in the S&P 500, atop that list, and I think the only major group that's up for the year is the energy names, or are the energy names. Year to date, ConocoPhillips is up almost 63%. What is it about Conoco specifically?
Well, there's a couple things about Conoco. First of all, both their top and bottom line earnings have been above consensus. They've been extremely favorable in their yield. They're a top leader in their space. So from a company in energy, we really like ConocoPhillips. As a sector, think about that. It's up that much, but yet oil's off 30% from its highs in June. And here we are at $75, $74 a barrel, and yet we have more possible geopolitical issues going on with Ukraine and Russia and drones going over, and we have OPEC, and your previous caller talked about Russia and China and all sorts of things. So we see that the energy sector is a sector you have to have exposure to. Even though it's up 60%, it's not time to short that sector.
But that just has to do with the longer term trends, right? In terms of a shift to alternative energy fuels and maybe not so much new drilling going on and so on and so forth. I mean, the fundamentals make sense why you're going to see maybe these energy names continue to trend higher.
In and of themselves, the fundamentals are winning out here. Absolutely.
Let's talk a little bit about chips just very briefly. We got 30 seconds left. Intel, another pick for you. Why Intel?
Well, Intel's actually one that I would probably avoid at the current time. They have a potential dividend cut, I think. They've had negative correlation to rate hikes. And even though Powell might pivot, we all think interest rates here for a little bit longer. We're feeling it every day. So that impacts the dollar, negatively impacts chips because they have so much revenue coming from overseas. They have negative free cash flow right now. So I like some chips. Intel's one that I would probably avoid. If you're in it, I would consider maybe switching to another.
Yeah, Intel down about 45% so far this year. And the company, we've got a story on the Bloomberg just a couple days ago, Intel saying it's on course to regain chip production leadership. They are trying to kind of right their ship, if you will. They've been the behemoth, but it's been a bit tricky. Dave Harden, CIO of the Registered Investment Advisor, Summit Global Investments, $2 billion in assets under management, on the phone from Utah. You are listening and watching Bloomberg Radio.
7:53 on Wall Street. I'm Charlie Pellet with today's company headlines. ExxonMobil is awarding its American employees above-inflation pay increases only weeks after the Texas oil giant posted its highest quarterly profit, underlining just how strong 2022 has been for the fossil fuel industry, while other sectors like technology and finance are cutting jobs. Sources say workers will be getting an average salary bump of 9%. Those who got promoted will see a further 0.5% actually 5% increase. ExxonMobil shares, they are lower right now. ExxonMobil is down by about 0.4%. Southwest Airlines is bringing back dividends for shareholders, which it suspended when the pandemic devastated the airline business in early 2020. Dallas-based Southwest says in a regulatory filing that it will pay a quarterly dividend of 18 cents a share on January 31st. Southwest shares, they are down now by about 4.7%. Carvana shares are plunging 43% as Wall Street's pessimism spreads on the company's stock after the online car dealer's largest creditors signed a deal to act together in negotiations with the company. Again, Carvana plunging now by 43%. Citigroup's trading revenue is likely to jump 10% in the fourth quarter as volatile markets continue to spur client activity across the street. That according to CEO Jane Fraser, speaking at an investor conference in New York hosted by Goldman Sachs Group. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we've got under 5 minutes left in today's trading session, and it's kind of been a kind of day when it comes to the equity markets, bouncing around a little bit. Call it flat on the Dow and the S&P, and the NASDAQ just down about shy of 0.5 percentage point. But it's really been the bond market day where we have seen investors moving into the Treasury trade. And as we talked about earlier, the demand for longer dated bonds driving a yield inversion to a 4-decade extreme. 10-year rates below those on 2-year notes by the most since the early 1980s. When we do like, whoa, superlative, that's a superlative.
Can I talk Christmas shopping?
All right, go there.
Okay, thank you.
Can I buy some treasuries?
It depends on who. It's better than coal, okay? It's better than coal.
But coal, over time becomes diamonds.
That's true.
Over a long time.
How long?
Okay,
That's the question.
Okay, where do you want to go?
Well, a few years ago, there was that Wall Street Journal investigation into Amazon and third-party sellers, and if it looked like something was being sold by Amazon, it wasn't necessarily being sold by Amazon, so now people are looking to where something is sold from. Well, now, thanks to Spencer Soper, our own colleague here at Bloomberg News, you've got to look at something else when you're buying something on Amazon. That #1 bestseller badge, because it's being hijacked by scammers right now. So people are saying that something's #1 bestseller, but if you look at it, it's in some random category that isn't at all related to what you're actually buying.
So don't trust it.
Exactly.
All right. So as Spencer notes, the product isn't actually a bestseller. Unscrupulous merchants are putting some popular items in slow-selling product categories to trick Amazon algorithms into thinking it's a hotter seller than it really is. The scam Bloomberg uncovered mostly focuses on smartphone mounts for car dashboards, phone cases, and USB drives. For example, one mount recently showed up in the, quote, replacement axle shafts category.
As it does.
The item rocketed to bestseller status because many more people are shopping for phone mounts than car axles.
Yeah.
No offense, I am so suspect of even reviews, like customer, like I just.
No offense, none
and I'm
taken,
a
Carol.
trusty
No
person,
offense taken.
but I'm always like, yeah, that's really the best. I don't know, like buyer beware.
Buyer beware.
Talk
I think
to your
is key.
friends.
You know what's also just remarkable to me is the way Amazon's website looks after all these years. It's like going to Amazon. It's like going to a blast from the past.
Wow.
Look at it.
A little shade there.
So, I use Amazon all the time, but look at the site.
You and me both. I feel like it's on speed dial. Can you do that? All right, everybody. We're going to check in with our TV colleagues. We're going to talk about the markets, take you down to the close on this Wednesday. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Katie Greifeld counting you down to the closing bell, and here to help take us Beyond the Bell. It's our global simulcast. We're joined right now by Tim Stenavik and the pride of New Jersey, Carol Master. We welcome our audiences across Bloomberg Television, Radio, YouTube, and Quick Take. Is that what they give you in Jersey?
They do. All right, so I don't even know. I kind of want to fast forward to the Fed meeting next week. I just kind of want to know what's the Fed
Maybe
thinking.
just was looking ahead next week. You guys are such a long-term.
You know why? They're both from New Jersey. That's why.
We are both the pride of New Jersey.
That's all we talk about in New Jersey. It's the Federal Reserve.
That does happen, right? No, but I really kind of want to know, all right, what's the new data? What's the new projections? What's the new dot plot? I just want to have an idea. We all thought we're going to see a little bit of a more dovish Fed after those comments from Jay Powell. I just, Tim, want to know at this point.
Don't we all? I mean, we just spoke to Dave Harden, and he wants to know what the Fed is going to do as well. He's the chief investment officer at Summit Global Investments. They've got about $2 billion in assets under management. He brought us back to the 1970s, though, saying that, we'd see huge rallies, and then we'd see, those lows being retested, and you would get back to those lows very quickly. He thinks that's going to happen again in this bear market. He just doesn't know what the catalyst is going to be.
You know what comes before Wednesday is Tuesday, and on Tuesday is the CPI
Katie,
report.
I was so confused. I wasn't sure, but thank you.
Well, that's the timeline. So we do get CPI on Tuesday, which is obviously going to be another biggie. 7.3%. That's the annualized expectation.
All right, well, there's your calendar update here for the day as far as the update on the markets. We're getting the closing bells here in New York, and I'm not sure how much you can read into the price action in the equity market. A lot of it following the cues from the bond market, but an S&P 500 is going to close lower by roughly about 0.2%. The number's still trying to settle here, but that's going to be about an 8-point loss on the S&P. The NASDAQ down about 56 points or 0.5%. And the Dow Jones Industrial Average looks like it's going to end the day basically unchanged, kind of poking back into the green as these numbers settle. Of course, the Dow has been one of the few, relative outperformers over the last couple of months versus the S&P. Russell 2000, Carol, down 0.3%.
Yeah, and remain a little bit of a hair of outperformance, if you will, when it comes to some of those big bank stocks. We've been talking about it, of course, at that Goldman Sachs conference where everybody just seemed to be so downbeat when it comes to the outlook. So the KBW Bank Index just up a hair, though, Katie, just up about 0.2%, up 1% earlier in the session. But I thought it was interesting in a day where it felt like everything was a lot lower, or at least dragged down for the most part, that we saw a little bit of a gain in those bank stocks.
Well, if you look at the industry groups, I don't really think there's a clear message to be read here. I mean, the S&P 500 down just 0.2%. It's a pretty much an even split if you look across the 24 groups that we do have. At the top, we have consumer durables. Then we have some health stocks up there as well, but really gains of less than 1%, so not that huge. If you look at what's at the bottom, though, you do have autos down pretty meaningfully, 2.7%. A lot of that is coming just from Tesla, Carol. I also see some media stocks there as well, but again, a pretty split day.
All right, I'm going to get to the number one and number two gainer in the S&P 500. State Street up more than 8% in today's session, rallying after some positive news in terms of a buyback and outlook for the company. The company coming out and saying it's raising its existing share buyback plan by up to $500 million. That's according to a statement. Now intends to buy back up to a total of $1.5 billion of common stock in the fourth quarter. So again, up 8% on State Street today. Campbell Soup, number two gainer in the S&P 500. This one was up 6%, pretty much closing at its highs of the session, up after reporting earnings. Analysts highlighting an earlier than anticipated outlook boost, a mild decline in volume, and strong sales growth and gross margin results. RBC sees the upbeat report as positive for packaged food companies. Who doesn't love a good can of soup? And then this
That's
one.
a 52-week high, by the way, 56.18.
Thank you so much for
actually,
that.
Actually highest since like 2017.
All right, so big move, right? Yeah, in that name. Prometheus Biosciences, man, Charlie Pellet has been talking about all of this on radio. Ticker is RXDX, surging more than 200% at its highs, finishing the day with a gain of 165%. It is a $4 billion market cap company. It's a specialty pharma company. They shared some data on a couple of trials of its investigational therapy for IBS. We're talking about inflammatory bowel diseases, and that apparently the results blew past expectations. So again, big move. It's up about 140% year to date, but about 16% of the float is shorted. But nonetheless, that was some outperformance. I thought you were going to talk about this earlier in the session, Romano.
No, I like to leave you something to do.
165%.
Thank you very much for that.
You're welcome.
Biotech is so fun because you can just see gains like that. It's very black and white, whether the studies and the trials work or they don't.
Yeah, exactly. And it can take a stock, right, that has been in the red, maybe in a big way, into the green, like in just one day.
All right, speaking of in the red, we saw mega cap tech actually weigh on the S&P 500 today. Apple among the worst performers on a points basis, Tesla in there, Alphabet, Microsoft, Broadcom, and more. Apple shares fell pre-market after the supplier of Murata Manufacturing said that it expects Apple to reduce iPhone 14 production plans further in the coming months due to weak demand. The president of Murata actually told Bloomberg News in an interview that stock in stores suggests slow demand for this latest iPhone model. We also did see some other news from Apple saying that it's upgrading security protections on its devices, adding the ability to encrypt iCloud data backups. Apple finishing the day down by 1.4%. And then Brown-Forman, the maker of Jack Daniels, Finlandia, vodka, Woodford Reserve, and more, falling the most since March of 2020 after second quarter profit missed expectations. Management came out and said that inflation, supply chain disruptions, and Forex actually drove gross margin decline in the first half of fiscal 23.
And I just want to point out on Carvana, too, because we were talking earlier about this idea of sort of all the debt holders trying to sort of bond together here and what that means for equity holders. You actually saw AMC saw off pretty hard on this as well because they're potentially facing a similar thing, and there's now concerns that you may see what is happening with Carvana also happen with AMC, and of course equity investors could potentially get shut out there. Also Blackstone down for a third straight day. I do want to get over to the yield picture real quick here, guys, because it was actually a big part of the story today. Down 11, 12 basis points pretty much across the entire curve here. And two things struck me here is the massive volatility. So just take the 2-year. You're down 12 basis points on the 2-year today, Wednesday. We were up 12 basis points on Monday. And of course, rinse and repeat. Last Wednesday, it was down 16 basis points. So there's been so much volatility in this space. It's not even about the absolute level of yields anymore. I think it really is that volatility. And that's really, I think, scaring a lot of people away. And then, of course, guys, we go back to economic conditions and what the yield curve is telling us. Deeper inversion on that 2s, 10s at about negative 85.
Well, Romaine, think of all the conversations we've had about Treasury market liquidity in the past week or so. This is what you're hearing
Well,
from
we've only been hosting together for 3 days.
I know, and somehow we've talked about this so much.
But it feels like forever, right, Katie?
It really made an impression on me, sort of the conversations that we've been having. When you see this type of volatility in the world's biggest bond market, this is not normal. If you look at the MOVE index, it's at levels double the 10-year, not 10-decade, 10-year average. This gets back to all the conversations I've been having with sources.
Do you care about GameStop at all?
Not too much, but a little bit. Why?
Well, their results are out.
Tell me.
Would you want to know?
I'd
you
love
ready
to
for
know.
it?
I'm ready.
3Q net sales, $1.2 billion. Street was looking for $1.4 billion. That was the estimate here. So looking like a miss on there. If you're looking for profitability, I haven't actually dug into the release, but I'm just going to take a wild guess and say not quite there.
Their NFT marketplace, wasn't that one of the big pushes?
That was one of the big pushes. And just real quickly, other earnings too. Rent the Runway.
Yeah, let's
Doing
go.
well. Those shares up about 5% in after-hours trading.
Yeah, let's go there. It is up about almost 6% here in the after hours. We know this one is decimated, though, down about 83% so far here in 2022, but raising its annual adjusted EBITDA margin outlook. Third quarter active subscribers, 134,240. Third quarter revenue, $77.4 million. That's above the estimate of 73.2. Sees fourth quarter revenue. Looks like they're raising that 72 to 74 million. The estimate is 71.9 million. But again, this is one that has been decimated. But so I feel like there's such a negative tone on that. I didn't even look at the short.
But some of those numbers, I mean, just on the surface, they look pretty good. And I think it's interesting too because we had the CEO of Signet on a little bit earlier, the big jewelry, Zales, and all that. And she was actually talking about the volume that they're moving, and more importantly, the idea that high-end customers are actually splurging on higher-end jewelry.
Luxury.
Right, or affordable luxury.
But then it goes back to what we were talking about yesterday with this recovery or who this downshift hurts more, Romaine, right? The higher spenders, right, who are in a better position to weather inflation and have more disposable income right now versus those folks who, you know, at least at one point during the pandemic, it seemed like the gap between the wealthiest in the country and the people who didn't have as much was actually getting smaller.
Yeah. I mean, and, you know, look, that's going to be the story. And I don't mean to sound insensitive, but is there sort of an argument to be made that the higher end consumers will be enough to sort of keep the economy from completely going off the cliff.
Did you see Bloomberg Economics, Anna Wong, some great research, and she said U.S. households have enough of a cash buffer, extra savings built up over the course of the pandemic. She talked about Social Security recipients, blah, blah, blah. I mean, we're talking about everybody, normal Americans, if you will. And she says to sustain consumption during the recession, our base case is for real spending to grow at a quarterly annualized rate of about 0.5% in 2023 with strength concentrated in services. She says there's enough for like 15 months of spending to go on. Like if that is true and things aren't worse, that could prop up the economy next year or help it out.
Absolutely. And since you guys like to look forward here, the flow of funds report is due out on Friday. We actually talked to someone a little earlier saying that might give us more insight into how healthy those balance sheets are.
Serving cake and champagne, so please be sure to come.
What?
for the report. All right.
Oh, okay. I'm gonna hold
so
you
glad
to
you
that.
listened to me. All right, that's a wrap, guys. Our cross-platform coverage, counting you down to the market close on this Wednesday. We do it on radio, TV, YouTube, and Bloomberg Quick Take. We will see you again with Beyond the Bell, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, our thanks to our TV colleagues. Wrapping up the trade, we are seeing Rent the Runway soaring in the after hours. GameStop just down about 0.5%. As you know, Tim, we are smack dab in holiday mode. Christmas carols, holiday cards, hot apple cider. We had some here at Bloomberg yesterday with some nice cider donuts.
And today, but you missed it. You were too busy.
There were Cinnabons or something.
And also fried chicken and waffles.
I did miss it.
Yeah.
Darn it.
It was out pretty quickly.
Thanks for letting me know
I'm
that,
sorry.
buddy.
I only got one.
Chocolate, though. I have to say we have a great chocolate store right outside of Bloomberg headquarters. Sometimes when I'm hungry, I just get a little snippet for the ride home. Chocolate, though, has gotten quite a bit expensive this year, Tim.
Yeah, candy and chewing gum prices, including chocolate, up a whopping 14% over the last year. That's according to the most recent U.S. inflation data. A lot to blame: supply chain chaos, Ukraine war spilling into commodities markets. For a look at all things chocolate, we're really pleased to have back with us Nirtej Afridi, joins us via Zoom from New York City. She is the CEO of the privately held global chocolate maker, Godiva Global. Nirtej, good to have you back with us. How are you?
I'm very good, thank you. Great to have you again.
Well, it's been a few months since we spoke with you, so I just want to start with an update on what you're seeing when it comes to the macro view here. 14% increase in candy prices over the same time last year, according to the most recent inflation data. How are you controlling costs at Godiva?
You know, Tim, the inflation has hit all of the industries, including the food industry. What we have done in our value chain, we looked into the opportunities to find cost savings and to deliver our consumers different price points by providing our chocolates in different sizes, in different formats. Having said that, obviously, Godiva was also impacted by the cost increases, ingredient increases.
So Nirtej, so does that mean then you say you're looking for different price points, if you will, for your consumer? So does that mean you might put just a few chocolates in an offering, or are you actually cutting the costs of things versus maybe scaling down kind of the offerings?
We are providing our consumers more options. What we have done during the last 2 years to provide Godiva chocolate, which is also synonymous with luxury, with premium chocolate, we try to make it more accessible, available to our consumers. With that, we also expanded our portfolio to different price points at different formats. In addition to the high premium gifting category, we also introduced informal gifting boxes at different sizes, at different formats, at different...
What does informal mean? That you can say, here's a box, a different size, can you just fill it with this, and this, I can pick it? Yeah.
Exactly. You don't have to wait until Christmas or Valentine's Day to enjoy Godiva. Now you can find a box of Godiva for a gifting to thank your friend, or for a birthday occasion, or just to thank your neighbor in the grocery store in your neighborhood.
I don't want to be pejorative with this term, but there's a lot of talk right now about shrinkflation, the idea of keeping prices the same or even raising them, but putting less of a product in something. And we're seeing that happen when it comes to consumer packaged goods right now. Is that something you have to do at Godiva to keep costs under control?
What we have done was we introduced the self-gifting category. We introduced different packaging instead of the most formal, the higher end gifting packages. We introduce different packaging formats to our consumers.
So is the packaging what's expensive? Is that, or is it
packaging packaging is very expensive, and the cost of packaging has increased during the inflation period and also during the supply chain shuffle last year after pandemic.
What's increased more? Forgive me. What's increased more? Has it been the ingredients cost, or is it the price of the packaging or transportation?
Transportation and packaging, I would say.
Wow, more so than the ingredients. That's really interesting to hear. So it makes sense that you'd make those shifts when it comes to informal packaging.
So Nurtouch, help me out. I'm on the website. Always fun to peruse, and it says buy one get one 50% off. So mix and match your way. Code BOGO. So buy one get one free. So is that because you've seen a weakening of demand and you're trying to get consumers to buy?
In the contrary, we have seen very strong growth during the past few years that continued in 2022 as well. The premium chocolate category has grown around 15%, but more interestingly, Godiva has grown 32%.
What is that? What is that? Forgive me. Is that top line growth, bottom line growth? What are we talking about? And what's the time duration?
The top line growth this year. Last year, we have grown similarly, like 38%. We are growing twice as fast as our competitors. The reason why we made our products more accessible. Instead of just being available for the seasons, we are making our products to more occasions. In addition to the chocolate aisle, you can also find Godiva in ice cream format or in biscuits format. And we are also expanding the occasions, the purposes to consume chocolate, from gifting to everyday, to self-rewards, to sharing.
We're speaking right now with Nurtouch Afridi, the CEO of the privately held chocolate maker Godiva. She joins us via Zoom from New York City. So you can stream if you're watching us on Quick Take or on YouTube. Nurtouch, I'm wondering about the competitors you mentioned. If you're growing twice as fast as they are, who do you consider your main competition?
The chocolate business in North America is one of the largest industry, in one of the largest chocolate markets. It's $18 billion market, and there are different types of competitors, from niche competitors to larger size competitors, you name it. The snacking companies, they are all in the chocolate category. How we position ourselves, we are in the premium chocolate category, and we are recognized as one of the highest quality, highest premium by our consumers.
So you mentioned U.S. chocolate market being the biggest. I'm assuming that's where most of your sales are. How much of your sales are in the U.S.? And you do sell globally. What kind of demand are you seeing, and what does it tell you about the global economy?
We operate in more than 100 countries. It's a totally global brand, and North America makes 60% of our sales today. Having said that, Greater China region and Middle East region are also growing very fast. About the economy, I must say that U.S. economy is very strong. Regardless of the economy's condition, we see very strong demand, sales in premium chocolate category, because people would like to reward themselves or find a little bit of happiness even during these difficult times. This is something that everyone can afford.
When you said very difficult times, what do you mean by that?
The inflation that the world has gone through and all the challenges after the pandemic and during the pandemic, we have gone through a difficult time globally.
Nurtouch, what about when it comes to, I don't know, I'm thinking about seasonality here, and the last time I was gifted chocolates was during the holiday season last year. Do you remember who gave it to me?
Did I give it to you?
You did it. You did. It was Carol, and it was very kind. And I'm wondering, if you think about your sales each year, what portion of your sales come in the fourth quarter of the year as a result of the holidays?
Holiday is the biggest season for chocolates, also for Godiva. And also in North America, it's a very seasonal business. Almost 55% of our chocolate sales happen during the last quarter of the year.
That's interesting, given that you have Valentine's Day in February.
Yeah.
And you got Mother's Day later.
Yeah.
Which are all...
These are all three big seasons. Valentine's is the next one.
I feel like every day is a chocolate holiday.
I agree.
Really nice to check in with you, Nurtaj. Have a great and safe holiday season. Nurtaj Aridi, she's Chief Executive Officer of Godiva, joining us via Zoom, in New York City. I mean it honestly. We have a chocolate store right down below us, and
no, it's
I walk
literally
out and you can
in
buy
our
like
building.
a little
There's a
snippet.
chocolate store in our building. We also have chocolate in our snack pantry here.
What kind of chocolate do we have?
These little biscuits with chocolate on them. Maybe we'll get you one.
Maybe.
Later.
Sounds like a snack time.
They're
All
pretty
right.
good.
You're listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on GameStop shares after hours. GameStop reported net sales for the third quarter that missed the average analyst estimate. After hours, we've got GameStop lower now by just about 4%. The Dow, the S&P, NASDAQ finished mixed today. The Dow managed to eke out a 1-point gain today at 33,597, but the S&P was down 7, a drop today of about 0.2%. NASDAQ down 56, down another 0.5%. S&P, by the way, declining for a fifth consecutive session. 10-year yield 3.42%, with the 2-year yielding 4.26%. Spot gold up $15 the ounce to $17.86, up by about 0.9%, while West Texas Intermediate crude 72.47 a barrel right now. Crude down again, dropping another 2.4%. So again, recapping here, the Dow finished in a mixed session. The Dow up by 1 point, S&P down 0.2%, 10-year yield 3.42%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much.
Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF's donor-advised fund is the smart, tax-efficient way to manage your philanthropy. Open a JCF fund now to lock in a 2022 tax deduction. Visit jcfny.org.
Now, Tim, remember yesterday we were talking, you actually highlighted this and put it on all of our radar earlier in the morning. It was a Bloomberg Big Take, and it was a story that really talked about COVID. And we're not just talking about long COVID, we're talking about 3/4 of survivors of critical COVID illness developing post-intensive care syndrome. It's a constellation of brain, lung, and other physical problems within 3 months of discharge. And this was from a study that was put out in May. It rendered some 750,000 post-ICU patients worldwide at risk of cognitive dysfunction in the pandemic's first year alone. It's the result of some of the treatment that people got when they went into the hospital. There are for some, long-term repercussions.
We're not talking mild COVID here. We're talking intubations, people who've been in the ICU and the like.
Yeah, and it's a tough way of living for some individuals. It also puts more strain and stresses on the healthcare system and economy. And someone who's very aware of those stresses that are out there already when it comes to healthcare and nurses in particular is Dr. Iman Abuzaid. She's CEO and co-founder at Incredible Health. We always remind you that her company is all about connecting hospitals with nurses and other healthcare workers. She really has her finger when it comes to the healthcare community and nurses in particular.
Dr. Abuzaid, great to have you back with us. It's been some time since we last connected. We always love to ask you about what you're seeing on the platform right now, what you're seeing when it comes to the nurses that you connect with hospitals around the country, because it has been a tough 3 years for them. Is it getting any better?
Thank you so much for having me. There's some aspects that are getting better and some that are not. So as we're going into 2023, we're expecting continuing wage inflation among permanent nurse workers. And that's been, the wage increases have been going on for multiple years now.
That's a good thing. Is that a good thing, like playing catch up with what many would argue, healthcare workers, nurses in particular, being underpaid?
It's honestly a result of just supply and demand imbalances. When there's big labor shortages, then employers have to pay more for the labor. And the other thing we're seeing as we're going into next year is just high vacancy rates. The U.S. healthcare system has the highest vacancy rates in nursing than in the history of the U.S. healthcare system. Increasingly, we're seeing the highest turnovers ever as well. So at 27% is the annual turnover right now, which is the highest it's ever been.
Is that because of how hard the job is? Is it because they should be getting paid more? I mean, how much are they getting paid? Why are we having such a problem here?
Yeah, so the big challenge is as a result of the pandemic, there aren't enough. Even prior to the pandemic, there weren't enough nurses. The pandemic made that challenge even worse. And so we're seeing very high levels of burnout and nurses leaving the profession, either choosing to retire early or leaving the profession permanently, and there's also not enough nurses being trained either. So it's a multifaceted problem for why the turnover is so high. They are being overworked, though.
Dr. Abuzaid, one of the things I think about when it comes to immigration policy, because I've often been in hospitals where a lot of the nursing community are immigrants, folks who've come from other countries. And I do wonder, as we look at what could potentially be, really life-threatening shortages if we don't have the nursing community there in our healthcare system, do we need to think about on a national level, federal level, when it comes to immigration policy of allowing more in to potentially help the gaps that you are facing and your community is facing?
Absolutely. I mean, the nursing shortage is the biggest labor shortage in the country. And of course, other countries are having their own shortages as well. So it's not a foolproof solution to just bring them from outside. However, we've seen record low levels of immigration into the U.S. since 2016. And we certainly don't have, and it's not keeping up with the demand on the healthcare system.
So what are the policy choices that policymakers need to make in order to fix this? So this is not a new conversation that we're having by any means. And it's like, hello, we're just not getting the message here.
Right. So it's going to take multiple parties to address this: government, healthcare systems, our educational systems, so on. So one thing I know for sure for healthcare systems in particular is that they are investing more and more in nurse career advancement and more flexible scheduling, because those two tactics in particular do encourage nurses to stay. And the number one reason why nurses are looking for a new job is they're looking for more career advancement. And then the second most common reason is they're looking for more work-life balance and a more flexible schedule. So the health systems that are adapting to that are having stronger retention.
I also do wonder about in society. I have a sister who is a nurse. I mean, we're talking, decades ago, who also went on to become an engineer, but she also then went back to nursing and got a master's. But what I'm wondering is, do people not want to be nurses anymore? And how do you maybe change that?
Sure. So actually, there's record levels of applicants to nursing schools. So there is a lot of demand from Americans who want to become nurses. Unfortunately, our nursing schools can't handle more capacity to train even more. They don't have enough faculty too, because the faculties, they're losing them as well. And then there's another bottleneck happening after nursing school. There aren't enough training programs at hospitals and health systems across the country to train large and larger cohorts of nursing. And then we also have the retirement challenge. This is the average age of the U.S. nursing workforce right now is 52 years old.
Fortunately, we don't have an aging population here in the United States that will need long-term care, right? And I'm obviously being facetious here.
Yeah.
Sarcasm alert.
Yeah. So listen, I think I'm hopeful for the future. I think market forces are really going to force are already forcing change. And forcing many parties to think.
Talk about that a little bit.
What market forces?
Where
yeah,
are we seeing
specifically?
that?
So we're seeing hospitals and health systems invest more in nursing career advancement, both leadership training programs, cross-training programs, specialization programs. We're also seeing more and more flexibility on their schedules, in addition to adding more part-time roles, more weekend shift options, just to make nursing a more sustainable profession with a very busy life and the various strains of the job.
What do nurses get paid?
It varies depending on the state, depending on the specialty. I'm in California right now, so the average nursing salary in California is $120,000. Nationally, the average is about $80,000.
We're talking hard work here, though.
Yeah.
I mean, long days, some flexibility when it comes to your schedule, right? But this is really tough work, and that's why we see so much turnover.
Absolutely, and then also, the pandemic didn't help with that, with the strain and anxiety that comes with the job too.
What are you seeing? What are you hearing from the nursing community about kind of what's going on in hospitals? I guess what I'm asking you is, we talked a lot about COVID and the impact, what we're seeing. Are they seeing any kind of upticks or anything new that makes you a little bit worried about what's to come?
Yeah, so we are still seeing very high levels of stress and burnout. And then the other thing we're seeing those is, we have 600,000 nurses on our platform. So over 10% of the U.S. nursing workforce uses Incredible Health.
Wow.
And we often ask, why are you leaving your job, or why are you considering a new job? The number one reason by far is they're looking for career advancement. The number two is they're looking for more flexible scheduling. Number three is they're trying to relocate or reduce their commute time. And then number four is more pay. And it's in that order. And so the hospitals and health systems that are putting together strategies, tactics, programs that address those reasons are the ones that are having the most success with hiring and retaining the talent.
What do they end up going and doing when nurses leave the industry?
I actually don't have much. To be honest, I don't have a whole lot of data on that. I just know that in the next 12 months, 25% of nurses are considering leaving the profession permanently.
This just came to mind, and this is just anecdotal, but I've spoken to a couple people who are in healthcare recently. One's an acupuncturist and other's a physical therapist. And both of them have told me that throughout the pandemic, what they found is they don't necessarily have the toolkits that are required to deal with what people want right now. Wow. They end up feeling like they're therapists in many cases when they're spending time with patients. Are you hearing that from nurses?
We are. We're also seeing nurses go into completely other industries too, including technology, including other types of healthcare professions.
I guess what I'm saying though is like what their training didn't set them up for the way that patients are interacting with them.
There's definitely more room for improvement in nurse training. That's for sure. But that's a forever thing. That's it can always get better.
All right, we're going to leave it on that note. Listen, take care, have a good holiday season, and stay safe. Always fun to check in with you. Dr. Iman Abuzaid, not only fun, but really informative. She's co-founder and chief executive officer of Incredible Health, joining us via Zoom from Austin, Texas. You know, it's interesting. Truly, my sister, years ago, she'd gone to college and wanted to be a nurse, and she went to a like a 2-year nursing school program that was straight through. And it's interesting, the school it was top in the country, but it has been recently torn down it was part of a hospital system. So it's interesting what she has to say about that. The training facilities are not necessarily there. And then you need, part of the learning experience, a big part of it was she would work in the hospital that was connected to it, and you were working with patients and learning in real time. And if you don't have those hospital affiliations, it's just not the same thing.
So who takes care of us if we can't find the nurses?
Gosh, we're going to go back to multi-generations. We're going to need living together so that we can take care of one another. Now look at you. You are so...
Good luck finding room in my apartment. You don't want to know what's going through my head.
My parents had 7 kids. We all took care of my parents. All right, you're listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
Let's get to world and national news. Nancy Lyons is standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. Senate Majority Leader Chuck Schumer is taking a victory lap today after Georgia incumbent Senator Raphael Warnock won the runoff election, and the Democrats gained a 51-seat majority in the Senate for the next term.
The fact that we got the 51 votes gives us just a great feeling, enthusiasm, unity, encouragement in that way.
Schumer says Warnock's victory will allow senators to keep subpoena power, move judicial nominees more quickly through committees, and allow simple majority votes to be taken. More classified documents, 2 in fact, have been found at a storage unit near Mar-a-Lago and was used by former President Trump. The New York Times reports searches of several Trump properties were conducted by a team hired by Trump after a federal judge directed the former president to have his lawyers look for any materials still in his possession. Some more saber-rattling today from Russian President Vladimir Putin. He calls Russia's nuclear arsenal a deterrent factor in war, and today he stopped short of promising not to be the first to use nuclear weapons. Putin told the Kremlin's Human Rights Council the threat of nuclear war in the world is rising. Former U.S. Defense Secretary Leon Panetta tells Bloomberg he is worried about what he's hearing from Putin.
The reality is that, that Putin is losing in the Ukraine, but he's a cornered bully. And he's going to strike out in terror, and he has.
Leon Panetta speaking earlier with Bloomberg Balance of Power. Saudi Arabia rolled out the red carpet for Xi Jinping today. The Chinese leader is visiting the kingdom for several days and will take part in a regional summit with Arab leaders. According to the Saudi news agency, Xi is promising agreements worth some $30 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on GameStop shares after hours, now down by 1.6%. GameStop reported net sales for the third quarter that missed the average analyst estimate. There are only two estimates on GameStop. Third quarter net sales, $1.19 billion. Estimates were for $1.39 billion. Turned out to be a mixed day on Wall Street. This update brought to you by the Donors Fund, a modern, innovative, donor-advised fund for everyone. Open a free account in minutes with no minimums, no transaction fees or hidden costs. Visit the donorsfund.org today and get your 2022 tax deduction. Stock market under pressure again today with the S&P down another 7 points, 5 losing days in a row on the S&P. The Dow eked out a 1-point gain, virtually flat on the day. NASDAQ was down 56, a drop there of 0.5%. 10-year yield 3.41%, with the 2-year yielding 4.26%. Spot gold up 0.9%, 17.86 the ounce. West Texas Intermediate crude down 2.5%, 72.37 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I have to point out that I was just looking at the introduction to a new book, and it says, as the English novelist and essayist George Orwell once observed, the history of civilization is largely the history of weapons. Today, digital weapons are reshaping the world, and ransomware poses what may be the greatest threat of all. As I said, it's in a new book.
We've got a great guest with us this afternoon. Dan Golden is senior editor at ProPublica, former Bloomberg colleague. His new book, The Ransomware Hunting Team, A Band of Misfits, Improbable Crusade to Save the World from Cybercrime. He joins us via Zoom from Belmont, Massachusetts. Dan, congratulations on the book. How are you?
Thanks so much. I'm great, and it's a pleasure to speak with you.
Ransomware, it's literally keeps executives up at night at this point. You can count, you need fingers and toes to count just what's at the top of your head about things that have been under attack. We're talking pipelines, hospital systems. The list certainly goes on. What was the moment that you knew you needed to write this book?
Well, I think what happened was we had done a piece, Renee, my co-author, and I had done a piece in ProPublica about a guy named Michael Gillespie, who was unknown to the world. He was had had a tough life, poverty, cancer, didn't go to college, and yet he was the world's greatest breaker of ransomware codes, saving many, many people, hundreds of thousands at least, from paying hundreds of millions or billions of dollars in ransom. And then when we realized he was one member of this elite society, this group called the Ransomware Hunting Team, that was essentially the world's most effective force against ransomware, finding keys for victims so they didn't have to pay, and yet not charging them a penny, we realized we had a great saga to tell.
All right, so tell us a little bit more, dig a little bit deeper, and tell us about this group of individuals, who they are, and what they are typically working on, because it sounds like we often report on ransomware cases kind of nonstop, and this has become a growing concern, growing problem, as Tim mentioned earlier. So take us a little deeper into the story.
Well, this is a group of about a dozen brilliant, largely self-taught tech and coding experts across 7 countries in the U.S. and several European countries. And what they do is they crack ransomware code. So when ransomware is done properly, it can't be broken, and the victim either has to pay the ransom or have their systems disabled while they try and recover. But often the hackers make mistakes. They cut corners, they leave vulnerabilities, and the team is expert at finding these vulnerabilities. And when they do that, they can then uncover the key to unlock the files without paying the ransom. As you know, normally the hacker will demand millions or tens of millions of dollars and say, without that, you won't get the key. But the hunting team provides it for free. And they're very skilled at what they do. Their lives are on computer. Many of them have not met each other. They're very shy, retiring, ill at ease, but they're brilliant, selfless people.
What motivates them?
I think that they regard the internet as their world and computers as their world, and they want to protect it and protect people. Gillespie, our main character, the fellow in Illinois that I described, he comes from a law enforcement background, and when he was a kid, his parents used to take him to the Superman statue there in Metropolis, Illinois, and he grew up with this just desire to protect people, protect the internet, and I think then also it's kind of an intellectual challenge, the bantering back and forth, the tactical interplay with the hackers. They love that kind of, cryptographic challenge.
How did they all kind of get together, if you will, and so that they were available kind of almost as you say, the ransomware hunting team? How did they become this band of individuals fighting against, pursuing cybersecurity and fighting against ransomware?
Well, one of them is named Lawrence Abrams. He lives on Long Island, and he's the founder and main spirit behind a site called Bleeping Computer, which is kind of like the salon of the ransomware movement, the ransomware world. Everybody goes there, victims, hackers, law enforcement, insurance companies, and his site predated ransomware. And when it started to become big, Lawrence recognized that it was a potential threat, and he had a lot of contacts in a lot of places, and he began organizing some of his friends and contacts to help fight it. And then now they take new members. They have to have a unanimous vote, and if there's somebody they consider worthy, they'll bring that person in. But Lawrence was really the motivating spirit behind it.
What's so interesting to me is that this team is not law enforcement.
Yeah.
This team is not hired to do this. This team is not professionally defending the internet from cyber attacks, from ransomware. Are the criminals 2 steps ahead of us, 1 step ahead of us? I mean, this has got to be something that concerns you.
Yeah, the criminals are always 1 step ahead. It's a bit of a whack-a-mole situation. And in fact, in a strange way, the hunting team, who, as you say, are just volunteers doing the best they can, in an odd way, they kind of contribute to ransomware getting better. Because what happens is this. Let's say a victim is attacked. They upload the files that have been disabled to the hunting team. It looks at them. It discovers a mistake in the coding. It finds the key. It gives it to the victim. That victim and other victims then don't pay the ransom. So the hackers then discover, no money is coming in. Somebody must have cracked our code. There must be a flaw. And they go through and they fix that vulnerability, and the ransomware gets even better. So the hunting team has had all these wonderful short-term successes, but in the long term, they're almost like a product tester for the hackers. And so the ransomware gangs, the quality of their ransomware keeps getting better and better. And also their tactics keep getting more and more ominous. Like in the last couple years, even before they hold you for ransom, they break into your system and they steal employee records or private student records, things like that, medical records. And then they'll say, if you don't pay the ransom, we'll post this on the dark web. And often they carry through on their threat. And so they use that as an additional hammer. So they're attacking bigger targets. They're demanding more money, and they're getting increasingly dangerous.
Hey, Dan, we're running out of time, but you do have a chapter, The FBI's Dilemma, and you talked about, James Comey in 2015, the FBI director at the time, talking about his cyber division facing a brain drain. What's been the interaction between this hunting team, ransomware hunting team, and government? And just got about 30 seconds, unfortunately.
Well, the FBI didn't pay much attention to the hunting team for quite a while, though they did use Gillespie as an informant, but they way underrated ransomware. They considered it an ankle-biter crime, and its rise kind of took the FBI unawares. But since the Colonial Pipeline attack, the FBI and the government are gearing up much more to fight ransomware.
I just want to know, George Clooney, Netflix, Amazon, are they calling? Because this is kind of a different version of Ocean's 11 or Ocean's 12 or what have you, but you could see it. It's got a real cinematic tale. Do you agree? Anybody calling?
I agree. We have had some feelers, but if anybody out there in Hollywood is listening, please give us a call.
It's fascinating. Great stocking stuffer as well. Dan Golden, reporter and senior editor of ProPublica, the ransomware hunting team, a band of misfits, improbable crusade to save the world from cybercrime.
I'm Charlie Pellet with a look at today's top company headlines. ExxonMobil is awarding its American employees above-inflation pay increases only weeks after the Texas oil giant posted its highest quarterly profit, underlining just how strong 2022 has been for the fossil fuel industry, while other sectors like technology and finance have been cutting jobs. Sources say workers are going to be getting an average salary bump of 9%. Those who got promoted will see a further 5% increase. ExxonMobil shares down today by 0.2%. Used car prices across the U.S. fell again in November as a sluggish economy and rising inventories continue to put pressure on rental companies and automotive retailers. The widely watched Manheim Used Vehicle Value Index last month was down 14% from a year ago. Carvana shares plunged today as Wall Street's pessimism spread on its stock after the online car dealer's largest creditors signed a deal to act together in negotiations with the company. Carvana plunged 43%. Prometheus Biosciences shares surged after the company said 2 mid-stage studies of its experimental drug for inflammatory bowel disease succeeded, and it will move into pivotal studies. On a down day for the rest of the market, shares of Prometheus up today by 165%. And JetBlue Airways says it will be updating its True Blue loyalty program next spring. JetBlue shares today down by 3.9%. Those are company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, more Business Week in just a moment. First up, though, let's get it over to Nancy Lyons. She's in D.C. with a check on World and National News. Hey, Nance.
Thanks, Carol. Another 2 classified documents have been found at a storage area in Florida owned by former President Trump. His legal team hired an outside group to search several of his properties. The New York Times reports the search covered Trump's golf club in Bedminster, New Jersey, Trump Tower in New York, and the storage area in Florida. The North Carolina legislature is asking the U.S. Supreme Court to allow it to draw district lines that would elect 11 Republicans to Congress. The state Supreme Court had ordered a new map that would elect 7 Republicans and 7 Democrats, reflecting the popular vote. Bloomberg's Irv Chapman has more on today's arguments before the court.
Lawyer David Thompson complained.
There was a map, and it was thrown in the trash by the court.
Justice Clarence Thomas said the question to him is,
what is the source of the authority for the North Carolina Supreme Court to be involved in a federal election?
Justice Elena Kagan pointed to potential consequences.
Legislatures could get rid of voter protections. It might allow the legislatures to insert themselves in the certification of elections.
The issue relates to wording in the U.S. Constitution giving states authority to set times, places, and manner of elections to Congress. In Washington, Irv Chapman, Bloomberg Radio.
Duke Energy officials say power will be fully restored in Moore County, North Carolina by the end of the day. Over the weekend, a gun attack on 2 substations knocked out power for thousands. Police and FBI are still investigating. And President Biden is set to speak at an event tonight to remember those who lost their lives to gun violence. The 10th annual National Vigil for all victims of gun violence is taking place at a church in Washington. It follows numerous mass shootings this year, including in Buffalo, New York, and Uvalde, Texas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons in D.C. Now we're going to head off to D.C. again.
Atlanta, where Joe Matthew is.
That's
yeah, let's
right,
go. Let's go check in with Joe Matthew. You got a
you're
big
not
program
home yet, are you?
Today, Joe. What can we expect?
No, so we've got a really interesting conversation coming up with Killer Mike.
Awesome.
Who can reflect the conversation and the emotion on the ground here in Atlanta in a way that very few people can. Democratic View, of course, a Democratic political analyst who has been criticized for reaching across the aisle to people like Herschel Walker. And I interviewed him down at the Ebenezer Baptist Church a little earlier today, and I think you'll enjoy what he has to say coming up. Some advice for everybody on how to finally bridge the divide now that this election season is over.
It'd be nice to see somebody come up with a solution. Is that kind of your first and foremost for you in terms of what you want to ask him?
Well, yes.